Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. My guest on today's show is Amy Knapp. Amy is the COO of Corsair Capital, a private equity firm that is focused on buyouts and infrastructure. When we started the podcast, the goal was to share best practices, and my conversation with Amy fires on all cylinders. Amy discusses her career path from public accounting to an unexpected opportunity to be a CFO early in her career and eventually becomes the COO. We then cover an array of topics from the operational challenges with having multiple strategies, a deep dive on ESG and DEI, and how to make the shift from being a controller to a strategic CFO. The team at Corsair practices what they preach, so there are some great takeaways here. And with that, please enjoy my conversation with Amy Knapp. Amy, thanks for joining me.
I'm really excited to talk with you, Scott. Very seldomly do I get asked to talk for an hour about what I do.
So how did you find your way into private equity?
Blindly, to be honest. I definitely did not set out ever with a goal of working in private equity or having the job that I have today. It's all been a follow the current path for me. When I went to undergrad, I was going to study languages and travel the world, and turned out that at SUNY Albany, the business school was excellent. And I figured that out when I got there by meeting some people who were studying in the business school. So I applied to the business school. Accounting seemed most intuitive to me and tangible relative to finance or marketing or what have you. And I also found out that there was some really good on-campus recruiting from the Big Six at the time, and that if you got an internship, you would likely get a full-time job. And I was like, okay, this sounds good for me. So I ended up at an internship at Coopers & Lybrand and then a full-time job in New York. I interned in Manhattan because that's where the recruiting was happening out of. But I thought I'd end up back home in a Rochester or Buffalo office of a public accounting firm. They told me there were 60 people in the Coopers & Lybrand Rochester office, including support staff. And why would I even want to talk about that relative to coming to Manhattan? So I said, okay, I guess I'll come to New York.
But you're from Western New York, so that's a big shift.
Yeah, it was a big shift. I'm the only one in my family who escaped. So I ended up in the capital markets practice and had a bunch of different clients. Some of them were private equity, but my largest client was JP Morgan. And as an associate, I was on the audit team that looked after the private equity business. And then there was this little group called Corsair that was doing private equity, but they were in the investment bank. So I also got put on that audit. Fast forward, I got poached by the controllers team at JP Morgan to work on the broader private equity portfolio. And about 6 months later, Corsair's CFO quit. The SEC had come in to audit them a surprise security count a couple weeks later, and they didn't have someone to help them through the audit at Corsair. So my boss at JP Morgan came and said, somebody called and has requested you go down and help them with this audit. So I did, and it all went smoothly. I was 25. It was 5 people on the Corsair team at the time. And the founders of our firm today were running, at the same time they were running Corsair and had raised funds 1 and 2 with the help of the private bank at JP Morgan. They were also running emerging markets, FIG, investment banking. So they were doing a little bit of both. And here comes the SEC, and we need to find somebody to help us through this. And at the end, they said, we need a CFO. And I said, yeah, I agree. And they looked at me and I said, I'll ask around. I'll let you know if I know someone who might be interested. And they're, look, we're asking you, would you be interested? And I thought it was a joke because of my age and experience level. And I said, yes. And it was not an easy decision because Chase and JP Morgan were merging at the time. And I had been slotted to go work for the treasurer of Chase in this merger integration. So it was a choice between the obvious and more known path, stay within my peer group and go where I'm directed, or this random leap of faith to go work with a bunch of investment bankers turned investors in this tiny little business. And I'd be a team of one. So I took the plunge, and that was 24 years ago.
Was there any one big moment, one point that you said, I'm definitely going to do it? What's the tipping point?
I was lucky in 2.5 years that I worked at Coopers & Lybrand. I worked on a lot of different products. So there was derivatives, and there was investment banking and trading and some private equity. And I think I felt private equity was more interesting. It was less abstract. Find a good company, do some things to it, make it worth more than you bought it for. It was more tangible and interesting to me than some of the other areas.
I'd love to hear more about Corsair. You guys have a couple of different offerings, which is a little bit different, but not too different, but maybe share a little bit about how you guys were just a little bit differentiated out there.
So today we're 10 billion of AUM between buyouts and infrastructure investment product. Buyouts is financial and business services focused for Corsair. And that's our flagship product. That was funds 1 and 2 while we were still at JP Morgan. And when we spun out, we raised fund 3 and so on. And then we've got our infrastructure business, which we acquired in 2015. So that's newer, but we acquired an existing portfolio from another manager. And basically we're tasked with obviously creating value to the 4 investments that were in that business. At the time, it was about 3 billion, but also running the portfolio off for the investors. We've turned that into a more robust business model. And it's now roughly 5 billion with the buyouts and 5 billion with the infrastructure business. But the infrastructure business was really a result of a lot of experimentation around diversifying. So funds 1 and 2 were more financial services, banks, insurance, investing. And during the financial crisis, that was a very difficult space to be in from a return perspective, but also investors weren't knocking down doors to have access to investments in the financial services industry, given what was going on globally. So we said, we've got to diversify. This is good to have, but we can't just rely on this. So we thought about a lot of different opportunities and ultimately landed on infrastructure as an idea and found this opportunity. And it's been fun because it's, like I said, 24 years I've been here. Loved the startup phase when we left JP Morgan. That was really fun. And now that's a much more mature, developed business. The infra opportunity in 2015 was a little bit like going back to that concept. We're a mid-market firm. We've got about 60 people between New York, London, 1 gentleman in Australia, 1 in Spain. So it's still a relatively small team. And we've worked together, many of us, for a long time. But we still have this entrepreneurial vibe. We're definitely curious and like to experiment. And that helps, I think, bring a different flavor as well to our investor relationships.
What are your responsibilities at Corsair? Because every COO, CFO is a little bit different.
I agree. If you took a survey across some of the biggest private equity firms, COOs all come from different paths. So mine was the finance and accounting path, but you have others, as you're alluding to, that were fundraisers or investors themselves. Today, my responsibilities at Corsair are everything non-investment related. So finance and reporting, tax, IT, HR, IR reports jointly to our CEO and me. I think as we grew and our IR team grew, we needed some more process and technology around it. So he asked me to work with him because he deals with more of the go-to-market strategy and messaging. And I'm here to help make sure it's done in an organized and efficient way. And then I'm on the IC for both our buyouts business and our infrastructure business. And I do partner with the investment teams on investment process and, again, technology and build out of the team from an HR perspective.
So tell me more about this IR process. What does that mean for you and Corsair?
So it starts with making sure our investment strategies are clear, and that's really done within the investment team. And then the IR team partners with the business heads to make sure the pitch and the whole why invest with Corsair is compelling and clear and really gets what differentiates us. And then it's who's in the pipeline in terms of who we're going to market to. We have obviously our existing investors, and then always looking at who else is out there that may be interested in the products that we manage. That has become really difficult in the last couple of years as allocations have been a little harder to access.
What about if you're an existing LP? What process do you guys have for handling and triaging, reporting the random day-to-day inquiries you get for more information, more color on the portfolio?
So I think that's really also a collaboration because there's some things that are within the finance team's purview to answer, some things that are deal teams, they want more information. We have our regular reporting. So it's quarterly investment updates. We have an annual investor conference that we hold and update our current investors on the state of the portfolio. And then our IR team is in constant communication with them. Often when we're making an investment in our buyouts product out of whatever fund we're investing right now, we also offer a lot of co-investment. So that allows our IR team to have a lot of dialogue with investors. They get a sense of what co-investments each LP might be interested in. And then there's a lot of dialogue to send a teaser and say, we're looking for additional co-investment in these opportunities. And then oftentimes their investment teams will work closely with ours side by side. So they really get to understand our investment process, which is also nice.
How do you think about the operations piece of it with multiple strategies? My experience is it's difficult to hire the right people, technology. It's not like you do one thing. You're like, oh, I'm just going to buy the best. I know somebody else who does this and this is how they recommend. So why wouldn't I just do that? Because they just have 2-3 masters, so to speak, on that about your priorities.
That's a great question. There's a lot of similarities for us between the buyouts and the infrastructure businesses. So from that standpoint, we could just tack it on and expand what we were already doing. Since the beginning, my philosophy has just been outsource where possible when there are great service providers out there. So a great example is our payroll and HR process. We've used a PEO since we left JP Morgan, and that's just been much easier than trying to administer that all internally. I think different products need different technology, different people, as you said, but also just sheer scale is another variable to how to think about it, because we've got 2 products now. We're actually pretty late stage on launching a new product. And it's just that third product, even though it won't start out huge, we have to rethink the whole operations and how we're going to staff that across the areas that I'm responsible for. It's like a kaleidoscope. It's always changing.
And how do you think about that? What do you insource? Even if you outsource, you own it, but how do you think about that mix along the insourcing and outsourcing?
So it's keep the highest value add stuff internally and leverage third parties for everything else. So valuations we do internally. For us, that's important that we keep it here. So we do that all ourselves. Fund administration, we've always outsourced. There's some great firms. We have a firm that we've worked with for a very long time. And I think what's important in general when you outsource is to treat the service provider as if they're in-house and as a partner, and don't take them for granted because their job's not particularly easy. They're dealing with turnover a lot, like at a fund administrator. That's challenging. So making sure that you're being a good client, I feel, is helpful to maintaining long-term successful relationships and helping each other out, because over the 24 years, there's been issues on our side and issues on theirs. And it's just, let's come together and fix this quickly and move on. We leverage consultants for ESG. As a mid-market firm, you also have to be really strategic about how many people you've got internally, because you don't have the AUM that some of the large firms have to hire a team dedicated to ESG, for example. So we have a consultant that helps us with ESG and DE&I initiatives. We have a consultant that helps us on compliance initiatives. So we've got a GC and one person to support him here, but we work with a third-party consultant on the SEC investment advisor stuff. We have a FINRA registered broker-dealer, and then we've got the UK FCA regulatory regime as well.
On the ESG side, I'm always curious because that is such a evolving space and everyone talks about ESG, but I think you have to almost go deeper. What do you mean by each of those components? It's such a catch-all phrase. How do you guys think about that at Corsair?
Well, that's the right question as a starting point for sure. And I guess we've had this consultant for about 4 years now. And the initial part of it was just defining that. What does it mean to us? And why is it important? So developing a responsible investment policy, for example, was part of the original mandate, and just getting alignment from all the partners on where do we fall on the scale and how much of an impact can these ESG principles have on our investment returns. So it was don't boil the ocean, pick the top KPIs that we think we should be measuring. So we do an annual reporting request to all of our portfolio companies, report in on these, I think it's 8 to 10 KPIs now. And then we just measure, and it helps us have a more informed and deeper discussion with our portfolio companies on how they're measuring up within our own portfolio and how we could potentially help them push the ball further. In our buyouts business, our investment strategy focuses on North America and Europe. So the ESG conversation is different with our European portfolio companies than they are with our companies here in the US. So again, you just have to be strategic. And if you've got X amount of hours or people, time to spend on this stuff, where are you going to be able to move the needle most?
And what's the pulse of the LP base on this stuff?
Our European LPs are driving much harder on the topic than our North American LPs, but it's definitely the importance of it and the references to it by our LPs have definitely picked up over the last 5 years. And DE&I for sure has been a big part of that. And there's an internal piece of it, a Corsair firm focused piece, and then how we interact with our portfolio companies on the topics as well.
And do you think that the US LPs will just take a look at what Europe is doing and driving and say, okay, or are they going to come back and say, no, I don't like vanilla, I want chocolate? Do they have a different view, or is it they're not sure what to do?
So in Europe, the E seems to be more of a focus, the environmental aspects. And in North America, it seems like the S has gotten more attention, the social aspects of what we do and who does it and all that. On governance, that's actually an area for Corsair that I think we are differentiated. So we have an operating partner, and he's been working with us for, I think it's about 10 years now, who focuses on talent and organizational diligence. He initially came on the scene as a coach here at Corsair when we were working through some succession planning fun and was really impactful here. And we said, you know what, our portfolio companies could use a CEO whisperer like this. So we built a value creation silo, if you will, around what Mike does. That's been awesome. But one of the things that I worked on with Mike was pulling together what we called the Corsair governance playbook. So we interviewed all of our operating partners who sit on boards for us, a bunch of our portfolio company CEOs, senior leadership at Corsair to come up with what does good governance look like at a Corsair portfolio company. So we can speak to that in a aligned way as we go out to meet new management teams and help them understand why would they want to partner with Corsair versus someone else. But it covered how do you build a diverse board? What does diversity mean? So we've got a bunch of templates and ways to think about governance that we rolled out to all of our portfolio companies and can use, train like our investment team. Because a lot of times you have young men and women on the investment team going to sit on their first board, and it just helps crystallize what we've learned in the way we think about governance.
And you hinted at the DEI piece of it. Tell me more about that.
We took for granted that we did think about building teams in diverse ways because we had done that organically. But you need to be able to articulate that in a way that an LP can go away or a management team can go away and say, okay, I get it. So we worked with a consultant to bring that story forward. We are more than half owned. So a majority of our firm equity at Corsair is minority owned, which helps set the table from a culture perspective. We've got 2 women partners, myself included, and we have always just enjoyed diversity of thought. So we've got people on the team who have grown up in different countries in the world, very different backgrounds and socioeconomic backgrounds. And I think we are all just curious about one another, and that creates a cool culture. There's not a lot of groupthink. We definitely have a lot of healthy debate around here, respectful debate. But as we've grown, we used to be 9 people. It was easier for us to sit around as we were hiring the 10th person, the 11th person, the 12th person. And even on the senior team, we just hired a new CFO. So you've got people in senior roles who have worked at other organizations, and you've got to be able to help them get up the curve quickly on what do these things mean to Corsair. So we put together some scorecards for interviewing to make sure we're weeding out unconscious bias. We've got DE&I training that we do at the firm level. We have started doing an annual employee survey to really not just assume we know how everyone feels, but ask questions and see if there are areas we can improve in to keep our employees happy and feeling included.
What's the biggest takeaway there?
I think the biggest takeaway from the survey, honestly, is just doing it makes every single person at the firm feel like they have a voice and we actually care what they think versus just saying we do. I think there were some interesting differences in responses to questions based on gender. women answered differently than men did, for example. And I think that when we look at representation on our team with different minority groups, there are certain that we could do better in, and that just measures it. And just knowing that we're measuring it on an annual basis holds our team more accountable, because in a given year, you address what you focus on.
It's the long game for sure.
Yeah. So just having it every year, we're going to pick this up and we're going to look at it and we're going to think about it and we're going to see where we can improve. It just helps drive the evolution of how we think about this stuff and how it impacts our business and our hiring practices. It just keeps it at the forefront of what we're doing.
Yeah, it's fascinating. It has a lot of interesting takeaways from the ESG side, because go back to let's just define what DE&I is. Let's just all agree when you're starting out, we're people all over the place on what it actually meant.
Yeah. And then you've got noise that comes in from outside the four walls of what's happening in the political sphere and how it's impacting education and what's talked about in our kids' schools. And everybody has their own opinions. But obviously, leadership is the group of people that need to define what it means for the firm. So our CEO was very, very involved in this. And thankfully, there haven't been any extreme views that we had to figure out. But there was an education. I would say there definitely was an education for all of us here on what definitions or how the LP world is going to look at what we're saying versus how we think they're going to perceive it. But even things like recruiting, we want to make sure that if somebody pulls up our website and meets with some of our team, that they feel we're an inclusive and diverse group of individuals and welcoming of different views, because that's going to get us the biggest pool of talent and help us keep good people here.
When you think about these DEI initiatives, what's the thing that people often get wrong about it?
Well, it's definitely not a box checking exercise. There's a quote, I think, in our training materials that I can't remember who said it originally, but diversity is being invited to the party, inclusion is being asked to dance. And I can relate to that myself. So I think we were 9 people when we left JP Morgan a couple of years later. And at the time, I think I was the only female besides the executive assistants who were coming with us. So at the time, only woman, only non-investor. And that was tricky to navigate. I get that, being asked to the dance versus being asked to dance. I understand that myself from my own experience. You can be at the table, but sometimes your thoughts on certain aspects of the business, you feel like they're not valued. Luckily for all of us, my personality wasn't one where I was going to just sit there and let it evolve naturally. I like to push the envelope and ask provocative questions and help them sometimes where maybe there were blind spots around inclusion. And that's been a challenge, but also I have enjoyed it. And thankfully, I work with a bunch of very open-minded individuals.
I mean, you've been at Corsair a while now. So how do you think about when you first started versus today and people coming in? We have more women coming into the industry, which is great. Any insights there of how it's changed?
There's so many layers. There's just the industry has evolved. It's a relatively new industry, private equity. So most of our firms are still run by men, and men who grew up as bankers, many of them. I think you have more lifetime investors now, but back then it was, you have a bunch of former bankers who have relationships and they become business operators, but they're really focusing on investing. And the operations of the business when private equity started are vastly different than they are today. Firms have gotten bigger, more complex, a lot more assets allocated to the asset class. And I think investors have definitely led the way in terms of things like ILPA and other investor groups just demanding more professionalized versions of how firms are run. And regulatory oversight has increased a ton, which also drives a lot of the operational urgency on all these things. So I think roles like mine, roles like CFOs, those have dramatically evolved. Finance used to be reporting. The finance team used to worry about getting audited financial statements out on time and capital calls and distribution notices and make sure investments were funded. That was what it was about. Today, CFOs definitely need to be much more strategic, partner with the management teams at private equity firms on value creation initiatives and strategic initiatives with the way that ownership of these firms is even changing.
On that piece on the strategic CFO, if you're middle of your career, how do you make that shift from being controller, CFO, strategic CFO? What are the key elements there?
Well, networking is really important and understanding how others are crafting their job descriptions. There was a moment where I realized, okay, success in my job is not measured by, am I producing the information that I'm asked to produce, period. It's sometimes leadership needs information that they have not asked for, and you're sitting there with the data. You know it better than anyone. So that shift to say they haven't asked for this and maybe they don't want to see this actually, but here's what I'm seeing and I need to raise the alarm bells on this. So I think that was a big shift for me. Thankfully, one of our former partners who was with us for a long time helped me see that a little more clearly. Also, get feedback internally. And usually you're working with a lot of smart people who have a lot of opinions. So you can go out and solicit those and cobble together a thread and just lean into that direction a little bit more.
And what about delegation? You're accountable for everything at some level within the business, but what do you actually own and what do you delegate? Because I think the delegation piece for a lot of people is hard.
It's not easy. And the answer to it is it depends on the day, the week, the month. But in general, you only have a finite amount of hours in the day and trying to optimize what you're spending those hours on. What's the highest and best use of your time for the firm? And I think the more senior you get, the more that's the question you always have to come back to. What's best for the firm, not what's best for me, Amy Knapp. I think when you're in your younger years of your profession, it's really about building your resume and complementing skill sets and working on things that you haven't worked on before and making sure you've got a really robust set of experiences to get you into that next level and promotion and whatever else. But at some point, you need to start thinking like an owner if you want to continue to progress. That's what I think. And sometimes that's scary because sometimes that means you're going to delegate work that you think is important and you've been the keeper of, and it feels like a loss of power almost if you're giving it up. It's also frustrating. Most things I do now, I have to ask somebody, can you send me this analysis? And then I apply, get me 80% of the way and I'll do the last 20%. But I can't get to the 80 myself because I don't have, especially since I've been here since day one. I could if I had all day, but that's just an extreme example. So it can be frustrating. It can make you feel vulnerable, but it's important to do it strategically and do it well. As the business has scaled, there's always something that needs readdressing. So just when you've got your finance function staffed the right way and everything's humming over there, all of a sudden you've got the private funds rule coming out and there's a whole bunch of stuff for your legal and compliance team to think about. And it has implications for IR and it has implications for finance. So it's a moving target in terms of what you delegate and what you don't. If you've got somebody new on, so we just hired a new CFO, I'm going to be more close to that maybe for the next 90 days. I want her to succeed in the role. And so it's not just here you go, call me if you need me. So I'll breathe it in a little bit and breathe that back out.
And then on the private funds rule, how is that impacting your organization? There's a lot there with the ruling.
Yeah, I would say we're still digesting how it's going to ultimately impact us. And the answer is I probably don't appreciate how much it's going to impact our teams and what they have to do. So we're still analyzing that, but we know it's going to require a lot more data collection, analysis, oversight. The verdict's still out on, is it all really going to come into play or not?
You probably can't wait around to see how that's going to happen, though.
Correct. Yes, that is correct.
How do you think about, you talked about the insource, outsource. What's a great hire for Corsair?
I'll stay on the op side of the house. You start by trying to benchmark your business and compare it to other similar businesses. So AUM, number of products, number of employees, number of geographic office locations, number of LPs. Some of the stuff's easier to figure out than others. But we did this huge exercise a couple years ago where we scrubbed a bunch of websites to try to get some of this info. Through our own network, we're close to certain firms. We can get some of that data through our service providers. Our auditor can say, hey, you guys seem lean compared to all my other clients. So you kind of put together all that data. And from my perspective, you can't have your hand up constantly saying, we need more people, we need more people, we need more people. So you've got to be, again, strategic about it. Keep the higher value added stuff internally, outsource where it's safe and maybe even better. Our fund administrator can do certain things better than we can internally. But I think still at our size, it's a good hire for Corsair as an athlete who isn't going to be fazed by having to think critically about what they do and how they do it. Like operational excellence is something we talk about a lot here is, okay, just because we did it this way the last 3 years doesn't mean it's going to work for the next 3. Let's think creatively. Let's always try to do more with less. And that's helped us attract really great people on the team here and keep the turnover low.
On that talent piece, how do you guys find talent?
So sometimes it's word of mouth. We were looking for a new CFO and we just put feelers out with our attorneys and fund administrator. And that's actually how we got introduced to our current CFO, who is great. And what's wonderful there is she was referred to us by our firm counsel. We've known him for 15 years. So he knows the ins and outs of Corsair really, really well and the personalities. And he worked closely with this individual in another one of his clients. So it was great. And he was right. And we're very lucky and happy she's here. Sometimes you got to do a more formal search, which we work with recruiters for that.
One big challenge that everyone has is how do you keep your culture, at least the important parts of culture, intact? When you scale, you can't take it all with you, but how do you guys think about that?
Well, I mentioned we have an operating partner who works with our portfolio companies now. He definitely is still very involved with all of us here. And it's always culture first, clarity of roles and responsibilities second. And you sometimes get eye rolls because it's what? It's soft stuff or it's obvious or we've said it before. But unfortunately, the more you scale, the more clearly you need to say it and the more often you need to say it, because if you don't, it'll evolve into something in spite of you. So you've got to be out and in front and repeating and over communicating. We're going through an exercise again, actually, just to ratify some statements on culture that we've worked on before and get that out there again.
Given the depth of the team and the tenure, one question I have is just, you mentioned succession earlier. Any advice for people who are trying to go through that?
The challenge of it for me has been balancing the practical with the emotional, because a lot of these firms are still founder-led and it's people who built this. And I always say to people, Corsair is like my first child. I have one daughter who's 15 now, but I've been here for 24 years. We spun out of JP Morgan in 2006, and I feel so connected to this firm and everything it stands for. For founders and people who have been around the business for a long time, there can often be a lot of emotion around it, any founder-led business. And our operating partner's been very helpful to us and to our portfolio companies because it's similar there. There's a life cycle of a company that scales. And what works in the entrepreneurial startup phase doesn't always work in the next phase or the next phase after that. So those are hard discussions and conversations. You can't avoid them because you've got younger people coming up who are trying to figure out what they're playing for and what's the path to partner. So we have to be honest with ourselves about that. I'm happy we finished that succession planning exercise successfully. Our founder is still here. He was chairman. He's now founder, but he's still very involved and supportive of the business. But there's definitely a legal, an emotional, and a financial aspect to those conversations that you have to keep all of those in balance.
No, that's great insight because I think over the next 10 years, I don't know what the right number is, there's going to be a lot of organizations who are going to have to go through that. And it's not easy. People have built these organizations. Like you said, this is your baby. And how can I stay involved but not committed?
And then back to the point I made before, what's best for Corsair versus what's best for me. It's not always the same answer. And it's hard to be selfless and think about the longevity of the firm at times, but that is the right perspective that we all try to keep in mind here. And making sure you're developing your teams such that if you're taking a 5-year view, you've got a bench that is coming up behind and able to take the reins when it's time. So we think about that too.
Well, Amy, this has been really insightful. I think I would like to end here with 2 questions. And I think one question I have for you is any advice that you would give to an emerging manager from an operational perspective?
Yeah, don't be afraid to take on challenges, even if it means you're not going to get instant gratification or a raise or a promotion or whatever. My journey's definitely been, sometimes I get described as the glue here. That's been because I'm diving in whenever there's a problem. I just naturally dive in and I'm doing it because I want the team to succeed. That's just been natural to me. I feel like a lot of times today it's like, okay, something goes wrong. You identify somebody who is the best person to dive in and fix it. And the response is not awesome, can't wait. It's, okay, well, am I going to get paid more and am I going to get promoted? It's always good to advocate for yourself and make sure you're feeling fairly valued. And I'm not saying don't do that, but it's not always the right golf club to take out of your bag, so to speak. So sometimes you don't get the promotion until you've actually been doing the job for a while. So just be patient and play the long game. That would be my number one piece of advice.
That's great. And then the other question I have is, what one book, article, website that you refer to people in industry?
One thing that I've found really helpful is E&Y does an annual survey of private equity firms on whatever the topics of the moment are. Do you outsource or insource? Questions like this as our industry evolves. I used to feel like I'd have to go out and have 20 conversations, put the data together myself, and then bring that to my partners to advocate to hire a separate CCO. For example, many years ago, I was CCO and I was like, guys, here are the benchmarks, here's the data, here's the why. We need a dedicated CCO and GC. I feel like this survey is very helpful to bring alignment and educate internally for partners who are not marinating in ops the way us COOs are.
I like that. Well, Amy, thanks for the time. It's very insightful. I appreciate all your perspectives, and I look forward to staying in touch.
Likewise. Thanks, Scott.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.